Good morning, Anne, and thank you very much for joining the Mint to discuss food global prices.
Well, thank you, Henry, for having me.
I thought to start with, it'd be really good to sort of get some of the basics, so how global food markets work, who the key players are, and such like, because I think a lot of people, obviously won't be involved in them and won't really understand that.
Right. So really what I think is really important for us to understand in terms of global food markets is that they are global. That there is a marketplace for grains, for example, and that's in Chicago, the Chicago Mercantile Exchange. And that at that market, there are real market players in the sense of traders who are buying and traders who are selling. And they are, of course, influenced by supply and demand. So when there is a shortage, the price rises. When there's excess supplies, the price falls. And then that's kind of common old garden economics, really. But also in the market, largely as a result of the liberalization of commodity markets by Clinton and Greenspan and Robert Rubin back in 2000, the Commodity Modernization Act is called. Also present in the market is big money, is big capital, is the huge financial institutions who have mobilized our savings, if you like, and in particular American savings, and now need to deploy those and make returns on them sufficient to ensure that they're able to meet their liabilities in the future, i.e. pension funds having to pay out in the future. And that means they've got to make very high real rates of return, and they do this through speculation. So as well as the real world traders in the Chicago Mercantile Exchange, there is a wall of money, if you like, at finite resources, finite quantities of grain. And so this was most apparent after Russia invaded Ukraine. And the argument is that prices rose because Russia invaded Ukraine. And I'm going to argue that actually there wasn't a real shortage. There was a shock for sure, and that shock did shake up the market. But there wasn't a real shortage. Very quickly, the shortage was overcome. New entrants entered the market and supplied. But what happened was the fact of the shock attracted capital, and if you like, speculative capital, and that led to a massive rise in prices, and to then the sustained inflation shock that we're still living through, actually. But then subsequently also, the wall of money withdrew, if you like, from the market, and prices fell. So what we get is massive volatility in prices, and the failure of societies, governments, economies to manage flows, stocks and flows of assets in order to maintain some stability. Now, really interestingly, the United States, when it came to the oil crisis, the price of oil going up, the United States has a reserve of oil, of course, being as powerful as it is, and with a degree of foresight, it's been building up reserves. And President Biden simply downloaded those reserves, if you like, and helped to balance the price. But in most countries, buffer stocks, as they're called, are no longer present. There's just total dependence on the market to ensure supplies. Anyway, so we have the financialization, if you like, of these commodity markets, which leads to volatility of prices and which, in my view, exacerbated inflation over this last.
What about, because there's futures, aren't there?
Yeah.
And people speculating on future prices, and then there are current prices.
Yeah.
So these speculators, do they tend to speculate more on the future, or they're trying to influence the current price?
And options. The point is they're using markets to gamble on whether or not the prices of prices are going to move up and down over the short or the medium or the long term. So they have all those options. They can speculate on a whole range of risks. But the main thing is speculating on movement up or down in price.
But how does that affect? I mean, if I'm just wanting to buy some grain now today,
yes.
The fact that someone's betting on what it might be worth in a year's time or whatever,
yes,
does it actually affect what I have to pay now?
Henry, I think the closest parallel and the easiest way for us to think about this is to think about London property prices, right? So if you own a property in London, you know that there is, if you like, a wall of money attracted by property in London because it's a collateral, it's valuable, it's finite in supply. And the effect of Russian money, Nigerian money, Chinese money on this finite supply of London property is to inflate the prices of property. And if you're struggling to get a house, to buy a house or to rent in London, you are paying the price of speculation on London property. And exactly the same way, the finite resource, which is grain, which is supplied on an annual basis as a result of harvests, the prices of those either stay high or when there's lack of confidence in them, they slump. But because commodities are so important to the global economy, they tend to be inflated upwards by this wall of money, is what I'm arguing.
So, but because I'm just thinking there is a somewhat difference between houses, aren't there? Because presumably people aren't betting on futures of houses, they're buying houses now in the basis that they'll keep rising in price.
Yeah,
but with grain,
that's betting on the future, Henry.
That's, yes, absolutely betting on the future. But with grain, in terms of actual the price at X point, I'm buying a ton of grain today. It's obviously consumed. It doesn't. I don't buy it and store it, do I? Or do I do that?
You do. You buy it and you have to use it.
Yeah.
So that the rise in price then filters its way through the whole manufacturing process and the buying and selling process until it hits us in the supermarket, essentially. And then that in turn has a so this is this extended period of inflation that we lived through. It is generalized, if you like, beyond just simply that single market, because it flows through into other stages in which grain is consumed, harvested, consumed, packaged, and sold off at supermarket level or whatever. So it's like a ripple effect through the whole production and process.
Okay, so this speculation sort of boosts prices and then they might fall and so forth. What about the future when we've got the potential with climate change going beyond 1.5 degrees and increasing chances of multi-breadbasket failure? I mean, do you think people will start speculating on that? How's that going to play out?
So the point is, the more shocks there are, the more there is to make from those shocks. In other words, volatility is extraordinarily attractive to those who are gambling, speculation. You win from volatility, you don't win from the stability of prices. Right. So shocks will cause instability and volatility, but equally, shocks are likely to lead to a form of protectionism. As you mentioned, India banned the sale of rice last year, 2023. We will see that countries increasingly will find that their food insecurity, if you like, is at stake, and they will become protectionist. And that in turn will distort markets. And that distortion in itself will cause enormous problems for those investors who speculate in markets. So, Karl Polanyi was very clear about this. He said, that what society does to protect itself from markets is in itself distortionary and dangerous, because it messes up the incredible mechanism of the market. And whether that's the money markets, the financial markets, or even real markets. And it's that act of protectionism which then precipitates new crises. So so the point is, well, I think we'll see the growth of buffer stocks. We'll see societies realizing they're going to have to now give up on global markets and begin to think about the domestic market and how on earth to protect it, because their people will rise up. You know, they're doing this already. We're seeing this happen in Kenya as we speak.
Yeah.
In Kenya, the question is about rising taxes. But the fact is that the people in Kenya are suffering from the cost of living crisis, from a period of inflation that's been very damaging to their living standards. And they feel very threatened by that. And so they're attacking the government and the IMF, that and rioting, and there are deaths and so on. And that in turn causes instability and makes things worse for Kenya in a way. And that is going to play out, it seems to me, in the global system as countries and as citizens begin. We saw that play out, I thought, last night in the United States' leadership debate. The fact is that while President Biden has done a great deal to stimulate investment, particularly in poor parts of the United States over the last 4 or 5 years, nevertheless, people have experienced inflation. And that inflation, while it's now coming down, they're still feeling the pain of that. It's this ripple effect that I was talking about earlier. And the deep resentment and insecurity caused by inflation is in itself, so they're turning to Trump, which in itself will be more protectionist and so on and cause more problems. So, I mean, you see this play out in that way, it seems to me.
Now, as far as I understand it, the most vulnerable countries in terms of their inability to feed themselves and their need to import are in Africa. Is that right, in particular? And what do you think they can do to stave off these risks?
So the question is that Africa is, it's true that it's at great risk of floods, and in particular of droughts and of failed harvests. There already are failed harvests in the Horn of Africa. So people are already starving and hungry. And it's this dependence on global markets. So, when Russia invaded Ukraine and prices rocketed, the countries that were first hit and most seriously hit were the Horn of Africa and East Africa. Africans are as dependent almost as we are on global markets. I've just come back from South Africa, and South Africa is a globalized economy. It's open to global markets. Zimbabwe, for example, which used to be the breadbasket of Africa, was persuaded by the IMF at some point that actually they could more profitably import grain from South Africa, because South Africa grew grain more sustainably, or they could import cheaper grain from South Africa than they could grow themselves. And so increasingly African economies have lost their ability to feed themselves as they've come to depend on international markets. And that dependence means that actually they're at very grave risk. They're going to have to relearn to grow their own food, indeed, as we have to learn, it seems to me. And sometimes that will be possible because they have fertile soils and so on and so forth. But at other times, because of droughts, that's going to be virtually impossible. And then it's going to be a matter of some form of cooperation between African countries to help out the most vulnerable. And the question is whether they are capable of that cooperation and coordination. Again, when we see countries fall into crises, then we see there's less coordination and cooperation than is needed.
And I suppose in Africa, as with a lot of places, there's been urbanization, hasn't there? And people have moved out, and farming is seen as a
Yeah.
low status area where it's difficult to live, I guess. Is that right?
And it's been encouraged to think like that. I mean, I find it shocking. I mean, I spent years in international development, and the IMF and the World Bank always argued that agriculture, it was crazy for countries to depend on agriculture for their livelihoods. Rather than, so for Haiti, for example, is a classic example. Haiti was persuaded that actually the Americans could grow rice more cheaply than they could grow rice, and therefore to give up on their rice farming and depend on American. Now that works fine if your exchange rate makes that sustainable, makes that affordable. But when exchange rates and the value of the dollar rises and your currencies collapse, as they have done in Africa, then actually importing food is very, very expensive. Um, and countries like Kenya, for example, are very import dependent. They're going to have to learn to become more self-reliant, if you like, more resilient by growing their own food. But that means relearning or unlearning what the IMF and the World Bank have taught them over all these decades.
And in South Africa, I mean, has since the end of apartheid, more black South Africans, coloured South Africans, and so forth, gone into farming at all, or is it totally still dominated by large white-owned farms?
I'm really not an expert on what's happened
Okay.
in South Africa, but you're right to say that actually there's been a massive move into urban centres where there are decent and better paid jobs than there are on the land. And that has caused a mass. I mean, Johannesburg, for example, has expanded. It's become this huge sprawl, and the energy crises that big cities are experiencing is largely because they're suddenly finding that there are all these networks built up, that they're having to supply overnight almost, as cities have expanded beyond, if you like, their infrastructure capabilities. So, there's going to be a crunch point at some point where, people have moved into cities and there aren't enough people, in my view, in the rural areas growing the food needed. But then hopefully we will begin to pay more attention to agriculture and the need for food. And countries like South Africa will, if you like, move the orientation of their economy away from the domestic economy and back towards the domestic economy, if you see what I'm saying. Because at the moment, South Africa is one of those countries that's massively dependent on exports, because exports generate hard currency dollars, and you can buy pharmaceuticals for your sick people with dollars. You can only buy pharmaceuticals with US dollars, and you can only buy oil with dollars. And that dependence that exists means that you're ignoring, in a sense, the resilience of your own economy, ultimately.
And I suppose resilience is going to become a more important issue, isn't it?
Yes, absolutely.
Well, hopefully people will take actions to try and develop a greater resilience, and certainly I'll need to. I get, as people see the climate changing and the increasing damage happening.
I mean, the thing is, what's so extraordinary is how our politics are so far behind the physics, if you like, of climate breakdown and biodiversity collapse. I mean, it's quite extraordinary that politicians just cannot prioritize this, or there are very few economies where that is happening. And so what they're going to have to do is to react to shocks. And, we know that reactions as such are probably not going to be sufficient.
Maybe, I wonder if it's partly the difficulty of telling the truth, that actually to say, well, things are going to get a lot worse, because politicians seem to have the one rule of being a politician is you have to say that it's all going to get better.
I think there's a real issue where actually African politicians are trying to raise the living standards of their people, where they have, what is shocking is that the median age of Africans is 90, the median age of Europeans is 30. This is a very young population, and they're going to be the workforce of the future. But right now, they're demanding that they have sustainable living conditions and that they have work. And politicians aren't doing enough to create those jobs for those young people. Youth unemployment in Africa is extraordinarily high, and we're going to see a real reaction to that. So politicians, I think, are thinking about how to create jobs, but how to create jobs in the center, and not necessarily how to create jobs as part of greening the economy, if you like. I mean, there's a lot of work to be done. There's a lot of work to be done in creating clean energy, but there's a lot of work to be done in growing food and in doing all that is necessary, and retaining water supplies, for example, or protecting water. For me, this is a labor-intensive. These are labor-intensive activities. But at the moment, people are only thinking about creating jobs in, for example, the tech sector. And the question is whether the tech sector is going to see us through this climate crisis.
I mean, it's interesting here in England. I know that there is a certain movement of young people sort of back to the land, in a sense, and into farming, growing, even though it's incredibly difficult to get in or get land or whatever. And I wonder if that could be a beginning of a sort of more of a social movement that actually people will want to go back to the land to feel more secure and sort of growing their own stuff and
I think that social movement exists already when people want to know about the provenance of their food, when they want locally grown food, when they are worrying about these things. But the power doesn't rest with those people. The power rests, I'm afraid, with those who dabble in global markets and for whom global markets are extraordinarily profitable. So the question is that balance of power and when that is going to shift, essentially.
Well, we will have to watch that. But thank you very much, Anne, for that fascinating discussion, and as ever. And I look forward to further conversations, because this, obviously, drama is going to keep playing out.
Yeah. And I hope to be more optimistic than I have been today.
Well, hopefully, indeed. Thanks very much.
Thank you.